trend line, gives it the kiss goodbye, and then comes down here to support. Okay, it just sort of stops dead in its tracks. Now, let's look to the left here at this 96.25 level about, and we'll just see what we can see. So let me go ahead and draw a line. I'll extend it there to the left, and we'll just kind of look back. I don't know why that line just disappeared like that. Let me see. Maybe that'll do it. Nope. Go up to a 4-hour bar. Okay, so here's our line. We've got our 4-hour bar. I was trying to do it all on the hourly chart, but looking at the 4-hour bar is really a bit more prudent. But let's see what's going on. Remember, this 96.20 level was a level I've been talking about for quite a while. Now, why? Well, really, because that 96.20 level is about halfway between this trading lane or zone here. It's actually a little bit lower, but I could see that the market had consolidated here, and consolidated here. So these three consolidation areas had this one, the bottom of it was about 96.20. The top of it here was 96.20, and the bottom here was at 96.20. So that level was an area that I was looking for possible support, and the market spiked down right around there and started reversing. So there was, at least some prior history of the market reacting to that point. Now I can also see that here's a level here. Let me do this with a different line. Let me actually put the line on the chart. We'll just run this straight across. Let me put this right at the highs. So there we can see that the market ran into resistance here. And you can see that although the market spiked above it once and twice, it really couldn't hold above it. And then again, when it finally did break, you can see that the market came back down and retested this level. You can see again, there are a couple of areas here where the market reacted directly to that line, which is about 96.71. So that's another area that as we start to look back at our current trading, that we want to keep in mind as a resistance level. Again, right there, the market spiked down to this 96, right about 96.70 as a possible area where the market will react. So let's go ahead and zoom back in. And again, we were looking at this trade as if it were just sort of developing. In fact, let me go back down to the hourly bar. So, we've got our 2 points. We've got our support level from down here. What we did is we took this low and looked to the left, and we saw, that there was a zone, if you will, of support. Here's, we've got the bottom here, and we've got the top here. We can see that based on the top end, at least, that we should get some reactions to this level. And you can see here that the market definitely reacted to that level there. It did manage to spike up, but couldn't hold, came back down, formed this shallow retracement here, and then pushed back up to form what was eventually this flag pattern. So in general, what I'm describing here is an area where I'm going to be looking for the market to present a trading opportunity. That trading opportunity can and will come in many different forms. It can come in the form of this type of flag pattern where you see the market moving here, or possibly even a pennant pattern. Either way, the market is trading in a range. A pennant pattern, I think, implies a bit more volatility because you start seeing the market close in. You can see that you've got this little pincher effect here, so you can see volatility compressing. You might see the market break out of the pennant or the flag pattern and just trade into a triangle pattern. You might see a symmetrical triangle like this where you've got two angled lines. You may see the market make a flat top and then a triangle that looks like this.